to Chatur Charts, the 31st May 2022 edition. The choppy start at the beginning of the day was aggravated by selling that occurred in the second half, primarily in the last hour of the day. Nifty Bank led the fall, and the other sectors also caved in, with the exception of auto and a few more sectors where buying and kept the pace up. So, what led to the fall? Is it the GDP number that the market is waiting for with bated breath? Or is it the rise in crude? Perhaps a combination of several factors. So, we will have to look at this rally with a little bit of caution and make sure that all the pointers that helped build this rally are in place for it to continue, or else it could actually reverse and negate the entire gain that has happened over the last week or so. So let's look at two important things that will kind of govern the direction of the market in the coming weeks. The dollar index, which has been quite of a little abated over the last few weeks, has now again started moving up. So with the movement in the dollar index, it is also kind of spurring the movement in the USD-INR pair. So as we would have seen that there was a rising channel breakout in the USD-INR pair, and it has stayed above that level for quite some days now. And again, today, the USD-INR pair has gone bullish. And overall, if one were to look at this entire formation, it's already a beautiful cup formation. And with the handle formation that is now happening, an eventual spurt in the dollar might actually spell bad news for equities. So right now, dollar is pegged around the 77.56 to 77.60 levels, but a spurt here could probably make it test the higher end of 78, and once it reaches 78, probably 78.45 to 78.5 could be a certainty. And if that happens, certainly it's going to have a negative impact on the equity markets, especially the Indian equity market. There's one other factor which is also raised its ugly head, and that's the crude oil. And right now, as we speak, it has already formed a symmetrical pattern breakout on the day charts. And this pattern target is close to about $27. So if this $27 target is placed about the breakout point, the probable target for crude oil could get to about $139 to $140 per barrel, which is very, very scary. And the previous time, on 7th of March, crude oil had briefly tested this level before settling down at $104, $105 per barrel range. And since then, it's been moving in a range, the upper range being $110 to $115, and the lower end being $103. But now with the pattern squeeze formation that you see here, crude oil has again erupted and broken out of the range. And if it were to retest the $139 per barrel range, then it would really see a very sharp correction in the equity markets, in the Indian equity markets as well. So we do hope, this is a very scary situation, and we do hope that this doesn't occur and this breakout fails and things settle down, because this is also spur inflation. So all eyes are on Brent as well as the USD-INR rates, and as to how that will move. And that is going to determine how our indices will move. So this is a word of caution. The markets can reverse. Brent oil also can reverse, but one has to really keep a very close eye before we take up long positions and start building long positions on stocks or on indices. So let's wait and see as to how the GDP numbers pan out today and how it's received by the markets tomorrow. Until then, have a nice evening. Please do like this video and subscribe to the channel and share it amongst your colleagues. Until then, see you then tomorrow. Bye bye.